Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering the June 15th due date for pass-through entity elective tax prepayments and some things to consider when making these payments. We have a 2-hour webinar on the pass-through entity elective tax coming up on June 1st, and you can see what this in-depth discussion will cover and get registered at caltax.com under the Webinars tab. Beginning with the 2022 taxable year, pass-through entities that want to make the election to pay the pass-through entity elective tax on behalf of their consenting qualified owners need to make a prepayment of the tax by June 15, 2022. The prepayment has to be at least the greater of 50% of the tax paid the prior taxable year, or $1,000. Entities that did not elect to pay the tax in 2021 will pay $1,000 on June 15th to preserve the right to make the election for 2022. There are no exceptions to the 50% of prior year tax requirement for the June 15th payment. Making an adequate June 15th payment could be difficult for entities that have their 2021 income tax return on extension and don't know the full amount of their 2021 pass-through entity tax payment by June 15th, or have a significant drop in income in 2022 over 2021, so making a large estimate mid-year may be difficult. In the first scenario, taxpayers should consider making a larger than needed June 15th estimate so that they're sure their estimate is at least equal to 50% of the 2021 pass-through entity elective tax payment. In the second scenario, taxpayers should consider the benefits of making a 2022 election because any June payments will not be refunded until the entity files their 2022 California tax return. Because there's no reasonable cause exception to satisfying the prepayment thresholds, we highly recommend that taxpayers that paid the pass-through entity elective tax for the prior year add a cushion to the 50% minimum tax payment threshold, especially if those 2021 returns are still on extension. Many tax professionals have been asking what the paid the prior taxable year language found in the pass-through entity elective tax statute means. Does it mean the amount paid in the prior taxable year or the amount paid for the prior taxable year? The FTB has clarified that it is the amount paid for the prior taxable year. If a pass-through entity is not in existence on June 15, 2022, then it does not have to make a prepayment. It will pay the full amount of tax owed for the 2022 short year return on March 15, 2023, assuming it's a calendar year taxpayer. The statute specifically states that the prepayment has to be made by June 15th of the taxable year of the election, and this applies whether the taxpayer is a calendar year or fiscal year taxpayer. We have more information on these prepayments in the June issue of the California Tax Letter, where we provide several examples and also cover some other recent updates regarding the pass-through entity elective tax. You can see what's included with a subscription to this monthly newsletter at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's California Minute.